Hello, I hope you're doing fine. I hope you're doing wonderful. I hope you're disco, and this is a market brief, and I'm still very bearish on the market because of many reasons. All right, this is the 10-year yield above, and below is the 3 months yield, and the yield inversion is still intact. And I think we've been inverted now for sometimes. If I'm not mistaken, 480 days now of continuous inversion. And this, I think this is the longest in records, but it doesn't mean it get invalidated. So that's a warning sign. Always you have to put it on the back of your head. Beautiful. And this is the Dow Transports and the Dow Industrial in the weekly time frame. And also, we still have the non-confirmation concept. It's still intact, where you have higher high in the transports, lower high in the transports, and also higher high in the industrial. And you almost have a sell signal in the weekly time frame. I think in the next week, if we have another 3% down next week, we will have that major sell signal in the weekly time frame to confirm that Dow industrial non-confirmation. And also on the Dow industrial, we have a bearish engulfing in a weekly time frame. Usually, this is a big deal. At least 2 weeks of correction if history repeats itself. And also, you have a hanging man in the Dow industrial at all-time high in the weekly time frame. That is not good. I'm going to discuss the Dow Industrial later. All right. So the VIX gave uh, a sell signal in the weekly time frame, and this is the weekly time frame. You have the VIX MACD in the weekly time frame, and below is the S&P 500. Also, we have a hanging man at all-time high. Okay, at the magic number of 5005. Okay, the percentage of this sell signal, the success of it, is really, really strong. Last time it happened, 24th of July, and that's what happened. Before that, Feb, and that's what happened. Okay, so that's what happened. Okay, not bad. Okay, this one, and that's what happened. So you could back test it, and I back tested this bad boy, and it's extremely reliable. So why am I bearish? Not because I'm a mean dark person. It is because of these things I talked about. So that's the VIX in the weekly time frame. It's MACD and the price action of the S&P 500 in the weekly time frame. Let me look at the DXY. Also in the weekly time frame. Also, it's MACD above and also S&P 500 below, and you have same results, except this one, it didn't work. But if you look at the VIX and the dollar on the top of each other, both of them get affect the S&P 500 more. Okay. All right, you can back test it yourself. Good deal. So sell signal from the DXY in the weekly time frame, it's MACD, and also the VIX is MACD, the yield inversion, and the non-confirmation for the Dow Industrial. Good deal. The Dow Industrial itself, you can see this pattern repeated itself since 2023, and it worked 100% of the time with minor corrections or minor pullback or corrective phase, and now it's exactly the same. Okay, breakdown, test, almost failure with negative divergence, and a sell signal in the MACD. This by itself is warning sign. And if you could backtest it yourself, when you have a reversal candle with negative divergence and a bearish MACD, at least a corrective phase takes place. Capiche? So this is the Dow Industrial. The SPIX, or S&P 500, have the same thing. So we have a measured move from July correction high to October low. You have 187 Fibonacci extension of A to B, and you broke down from that bearish wedge, and you retesting that trend line with both negative divergence and a bearish MACD, which indicates a sell signal. So you have a sell signal in the S&P, sell signal in the Dow. You have a warning sign in the non-confirmation concept, according to Dow theory, between the Dow Industrial and transport. You have a sell signal in the VIX's MACD in the weekly time frame, and also the DXY. Good deal. So this is the 10-year yield, and it's definitely in breakout mode where it tested the low and succeeded. And we may break the high of the CPI day at 431. We're very close. We're 430 now. And also, we can see its effect on the Dow theory. So this is the Dow transport below it. And this is the Dow Industrial. So according to technical analysis, when the trend changes, it takes extreme power to reverse that change. So now we have low, higher low, high, higher high, and a breakout. And according to Elliott wave, we have 5 waves up, 1, 3 waves down, 2, in a zigzag, and we registered 3, and we're gonna have the not the final, but a strong fifth of 3 very soon, maybe next week. Okay, so even in Elliott wave, we're gonna have an up leg in the 10-year yield. Okay. All right. Please like if you like, share, subscribe, and do remember, disco is forever.